Hello, in this presentation we will take a look at the home page of QuickBooks Pro 2018, focusing in here on the banking section of the home page. If you've been working along with us, we will be continuing with the Get Great Guitars problem. If not, that's okay. We will be looking at the banking section of the home page. If you have the backup file, you can restore that by going to the File and Restore. We see that in a prior presentation. And we have the Open Windows icon over here. To have the Open Windows icon open, go to the View tab and Open Windows List. We currently have the home page open. To open the home page, if it's not currently open, we go to the Company tab and Home page. In prior presentations, we looked at the Vendor section, the Customer section, the Employee section, and the Company section. We are now going to take a look at the Banking section of the home page. Another really important area in terms of many important icons. However, the flow here, typically this deposit is going to be, as it shows here, part of the customers section oftentimes, because the deposit is going to be part of the flow in terms of creating invoices, receiving payments, and then making a deposit. So this item I often use in terms of the home page because it is part of that flow process. I also use the write checks oftentimes within the home page because that's a convenient item to have within the banking section here. It's not up here in the vendor section, which is the typical flow for when we write checks. We would have the putting the bill into QuickBooks and then using the pay bill to write checks. So that's going to be the difference between those two items. Some of these other items, like the company section up here, because they're not really part of the standard flow of the day-to-day processes, I tend to use the drop downs in order to get to some of these other sections. So I'll show you that as we go. The deposit here, like we say, is typically oftentimes part of this normal flow within the customer section, where we create an invoice, receive the payment, have the check in hand, and then go to the bank, or create a sales receipt and then go to the bank. So this is the actual icon we want to have when we're looking for the amount that we will be putting into the bank. We're going to group all the checks together, all the deposits we have, go to the bank and put them in the bank in accordance with that grouping. And then we would select this icon typically, and when we do so, it will have a pop-up here, and that's usually going to be the stuff that QuickBooks says, hey, this is ready to deposit, meaning you have a sales receipt and we put it into this undeposited funds account, which we'll talk about later. And now you need to put it into here as a deposit. And when we do that, then once we go through this process, QuickBooks will do the transaction of increasing the checking account for the amount going into the checking account, and it will decrease this undeposited funds. So we'll see more about what that undeposited funds is in a bit. But in essence, of course, I'm closing this back out. The deposit will increase the checking account, that being our main deposit account typically. Then we have the write checks icons. Write checks, of course, means that we're actually just going to write the check. This is going to be different than the vendor section. You might think, and it would be reasonable, to have this write checks icon up here in the vendors section. And I'm not exactly sure why they didn't put it up in the vendor section, except maybe that it might confuse the normal payables process with vendors, which would be to actually enter the bill first, meaning it goes into a liability of accounts payable, and we record the expense, and then we pay the bill with a check, meaning we're going to decrease the bank account and decrease the fact that we owe the people money. The write check will bypass this first item in the vendor section by just writing a check, which means we're going to decrease the checking account, and we're going to hit the other account, which will be something like expenses or an asset if we're buying an asset. And it would look just like we would expect if we look at the write checks icon. We got the check, we got the check number. The check number will be pre-numbered, so if we write checks through QuickBooks, we're going to need pre-printed checks that we will then put into the printer. The printer will then print on those pre-printed checks. One of the big internal controls being the fact that we have the pre-printed check numbers, which should match these check numbers here. We've got the date, who we're paying to, the amount, the address, and the expense in terms of what the other side will be. When we record this, then we will be decreasing the checking account and doing something to the other side, oftentimes an expense. So we'll have to label this something like utilities expense, telephone expense, meals and entertainment. If we're buying inventory, then we're going to be over here in the items section. So we'll see more about that when we go through the processes. So we'll close this back out. Then we have the print checks icons, and when we write the checks, we could write the checks and assign them. So if we select the write checks once again, and we say print later, then we won't assign the check number until we actually print them, and then we can go ahead and print them. So if we say print later, it says to print, rather than if I uncheck that, it gives us the check number. Closing this back out then, if we went to the print checks, we can then print out those checks and it would assign the check number in accordance with the printed checks. And that would only be used if we were to print the checks, where we'd have to have pre-printed checks. We, in this system, we're going to assign the check numbers here and just enter the checks as we go when we work through the problem, but I'll try to show you when the check printing process could happen, and it could be useful to use the checks and print the checks. That is another internal control that can be used if we use QuickBooks to print the checks out. Then we have the bank reconciliation. This is going to be a critical thing to do at the end of each month. We want to get the bank statement, we want to reconcile it. What this does is we're just taking the bank statement and comparing it to exactly what we have in the books. It's the huge internal control, not only over cash, but over a lot of the other processes, because cash is involved, you'll see, in all of these cycles. So the fact that we can double check our cash account and all the transactions that go through cash with a third party, the bank, typically very dependable, then we're really kind of checking all of our transactions. So this is a huge thing to do. I typically don't go through it here, however, because it's not part of the just day-to-day flow process. And so you can get to that same section, and we will, as we work problems, go through the banking section and go to the reconcile in this format. If we select the reconcile, it'll be this process. It'll have the checking account or whatever account we're working in, the month that we're going to reconcile, beginning balance, that's the beginning balance or the ending balance of the last bank reconciliation, then the ending balance. And once we go forward through this, we're just going to tick and tie everything off from the bank statements to our books. It's actually not too bad. It's pretty easy to do, and it's a huge internal control, so we will look at that, look forward to that. And then we have the check register. That's going to be, a lot of people are really used to seeing the check register, and QuickBooks uses a register type of function for a lot of different, all the accounts, all the balance sheet accounts, basically. So we'll use the register in terms of the check register, can be very useful to look at. And we'll use the registers and actually some other accounts too to try to avoid some journal entries sometimes. So to try to do some processes in such a way that we don't need as much of an understanding of debits and credits to do them. So let's take a look at the check register. And this, again, this might be a little bit more familiar looking type of thing to people that are working with a register. So we would have the date, we would have the check number, we've got who we're paying to. This is an employee check. Let's look at this one. We paid a bill. So it's going to Verizon. When it was a payment, we had the payment section versus the deposit section. And then we paid off, in this case, the accounts payables, the other account. This may be the thing that people are not as used to if we're just used to reconciling our cash account, meaning we probably just said Verizon, decrease our cash account, and said, yeah, our cash account makes sense. Okay, but then we also just need this added information of saying the Verizon would be a telephone bill, except for here we're paying off of the bill. So we paid off accounts payable. So we need that other account, in other words, here to make sure that QuickBooks has two accounts so it can record a transaction with two accounts. And that's how the register will work. Let's close this back out, closing out the register. And then we've got the enter credit card charges. Now this is going to be useful when we have the credit card. There's a couple different ways we can do it, but in essence, when we enter the credit card information, especially if we don't pay the credit card off all at one time, we want to be able to track that information, and we want to track it by date. So what we really want to do is enter it into its own kind of register and then pay off what we have so that we can still show the balance due while entering all the transactions that we have incurred over the time period. So if we select this icon, we see something that looks a lot like a bill or a lot like a check, and in which we have the information up top, the purchaser, we've got the date, we've got the amount, and then we can enter the expense. And what this is going to do is it's going to increase the credit card charge, meaning our liability for the credit card charge each time. So we can put in one expense, but we would have to keep on saving them if we were to go through our credit card statement. In other words, if we were to enter our credit card statement, we would have the statement possibly at the end of the month. We would have a bunch of charges that are all of different dates within that month. We can go through the statement and put in each of those charges by putting in who it's going to, the date of each charge, the amount, and then the expense here, and then save and new. And we can go through our whole credit card statement, and by doing so, it will increase the balance by the amount of charges we enter here. Then we can go in and write a check for however much we want to, and write the check to, say, American Express or Visa, and have the other side of the account go here, and in so doing it will reduce the credit card down to whatever balance is still due. So I'm going to close that out and I'll try to explain that a bit differently. If we close this out, that's going to be this icon. If we go to the register, and I'm going to go to the register up top, and go to banking and use register. And we can go to the credit card. I'm going to select the Visa in our case, Visa credit card, and OK. This looks a lot like the check register, and like I say, every account has a register. If we were to enter some transactions into what the screen we just looked at, what would happen is we'd see another line item for each new transaction. So you can imagine us just entering another line item for every transaction on our credit card bill. The bill here would then increase. It would just keep on increasing until we get to the balance on our credit card statement. And then when we pay the credit card statement, what we would do, let's go back to the Home tab, and we would write the check here. We'd write a check, and the check would be going to Visa in this case, and the account then would be not a particular expense, but would be that credit card fee, meaning it would be the Visa account that we've just been posting to. So when we write this check then, say we owe $1,000, say we paid $600 of it, it would be going to the other account, the Visa account. And if we went back to this check register in Visa, we would then see the payment here for the $600, bringing it down to the balance now due of $400. So the credit card accounts can be a little bit confusing to track within QuickBooks, but if you use this process, you could actually enter directly here rather than, if we go to the Home tab, rather than putting all the data into this process, you could go directly to the register, the Visa register, and do the same type of activity, and entering each charge on your credit card statement here just like you would in a check register. And then when you make the payment, it'll make a payment over here and bring the balance down to whatever balance is on your statement. By doing that, you're tracking both what your payments are, and you're tracking the charges, not by when you paid them, but by date, when they actually happened, by going through the credit card statement and entering that information. So that's the credit card statement there. And so that's going to be the icons within the banking section of the home page.